Good morning. This is Simon with Trade and Perform Coaching doing the market preview for ES and NQ for the 6th of July. It's going to be an interesting day. We are trend down overnight after the Fed day. Morning after trade really probably kiboshed a lot of people in the overnight session. I don't think that they were looking quite for that response that they got, and I think it was probably a shock to a lot of people. Let's get the start button going. I mean, people are really getting roiled from day to day, and we are going to figure out how we're going to navigate this today to pull some P&L out of the market. Quick reminder and disclaimer for all traders and investors: the webinar and everything on my Twitter stream is for educational purposes only. The idea is to bring traders from either losing traders or break-even traders to consistently profitable traders, right? Trading futures, equities, and options has large rewards but pretty big risks, right? You can lose all your money if you don't have a proper risk management plan, okay? Don't trade money you can't afford to lose. I'm not soliciting anyone to do anything in any way, shape, or form, and particularly in buying futures or options. Past performance is not indicative of future results, right? And consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, so let's jump into it. Let's pull up the overnights. Okay, I've already got Globex high and Globex low in. And Julian, I know you're new in the room. Just hang with me, my friend. Dr. Baldridge's son is in the room this morning. And just observe, and we'll catch up later when we have a chance to fill in the blanks. Write down what questions you have. Okay, so let's look at the overnight here. Let's get just a big picture 15-minute going. Okay, so overnight, we clearly have an established downtrend going, right, from yesterday's peak all the way to the overnight session, right? If you'll notice, so there's a couple of key things to notice through here. Let me lower the curtain here, the sun's coming out. There we go. Okay, so a couple of key things to notice. First of all, this has been about the low that we've held through this process, right? We've dipped below a couple of times, but we got to get an impulse move to get below, and this has really become, see how that's become support resistance through here, this little area. So that really has to get busted in order for it to work to the downside. Otherwise, you're going to see it's going to be difficult for the market to move lower, and it's going to be difficult for the market to move higher. And really what it looks like to me is if we can't get above here, you've trapped a boatload of people, okay? The problem is we haven't broken down below this 15 area either, right? So it kind of creates a double window, right? So this is why this is the white zone. If we hold below and fail to get back above 24.15, right, there's some pretty major league problems coming into the day, and it's a concern, right? But again, that white zone, which lines up with this area, right, this has to get broken on an impulse move, and then either open drive lower or at least an impulse and backside test of failure to get back above 24.15. You can see this whole area through here, which I highlighted yesterday, this whole thing from really 25 to 30 all the way down to 20. See how we keep trading through here? This is why I don't want to take 50, 60s or try to catch reversals in this area. It's just been bad mojo in this area to try to catch a reversal here. There's just too many sweeps that are going on in here, which puts us kind of in the sidelines in that particular area. But being on the sideline is better than getting swept, right? Because you're frustrated that we just missed the key area yesterday, right? We got it tonight. We got it in the overnight, and my guess is we will test it pretty soon after the open this morning. I doubt we get an open drive higher, but we could, right? There's no rule that says we can't get an open drive higher. I think an open drive lower is more likely, particularly in NQ. NQ's teetering, right? They're really trying to hold it up, but you see how quick what's going on there in NQ. So look at the same picture on NQ, right, on 24 hours. So what's happening is we're getting a bunch of people trapped, right? Everyone's convinced we're going lower. We squeeze all the people out. We come back to basically where the prior structure was, right? Push into the middle of that structure, which is what we did yesterday, right? And now we've come all the way back, and here's the middle of the structure again. See how we're testing from side to side on that? But the concern is this. Usually after a trend day up where you close the high, what you would expect is a little bit of pullback, maybe right back to this point. See how they tried to hold it here overnight? See how they try to hold it right in this little area, right? So the concern is normally what you would expect is for it to come up and push this 5,700, right? Same thing in ES, but we're not getting that. That opens the door for a retest and a break of the low, okay? So now let's rewind a little bit and go to the chart itself, right? If we look at the chart itself, okay, on ES, this is where the white zone is, 24.1850 to 24.1550, right? So I don't want to short into that white zone because I would normally expect it to hold. But I'm going to get caught. I'm going to get caught in the morning with I can't short it, and I'm going to need an open drive through it. And if I get an open drive through it, I'm probably willing to test and take a short on a push back up. This zone I noted is weak. It is support, and you saw where they tried to hold it last night, but it's weak, and you see how they traded through it. Same thing here. Okay, so if locals are in charge or shorts are just very aggressive, they'll use this area to short for a pushback down. Okay, however, if they're not weak, right, they're going to blast right through and come right up, and they're going to go white zone to white zone, just like they did key zone to key location, right? So let's look at what we have below, because I want to cover this really carefully. If you look on the TPO, okay, so if we look at the TPO, see how this is the last place where we had a time build on the chart, which is what the TPO is showing, right? This is the last place we had a time build, right here. Okay, if we fail, right, if we fail below here, see how there's nothing here to hold? What's the reason why? So then the question becomes, what's the reason why that's important? The reason that's important is, so see when we were over here, we had all these TPO points of control up here? And see, once we got below them, right, we had this last little TPO right here, but it kind of sort of been tested. The majority of them were up here, right? So once we got past it, and particularly once we got past this point right here, see how easy it was to slip below, right? And then look at where the market comes back to. The market comes back and it comes back to this TPO. Now look, once we get up to this TPO, right, see how there's simply no TPO to help out over here. There's no point of control to help out. And the market's able to auction all the way through. We have a similar situation, right? We have a similar situation with what's going on right here and right now, right? Here was the TPO. We auctioned back up to Monday's TPO even though it was weak, and we stopped. That tells us a lot because this was weak. It was done on light volume and it stopped. Now if you look underneath, there's no clearly defined TPO, and even this is moderately defined TPO. So what does it mean? It means we can end up possibly with a day that looks like one of these 2 days right here where we can sweep straight through. So then the next question comes up is where's the natural target below, the highest odds target below? And it's all the way down at 95 actually. This right here is our next natural target where I'd find support. And if I wanted to have one place where I was going to risk taking a stop or use a half-size double stop, it would be in this 24.95. Then it's going to come all the way down. Excuse me, I stand corrected. 24.05. No, 24.05 already tested. Let's switch this. Hold on. Okay, so see how, okay, so visually, traders are going to use this 24.0236. They're going to use that as a visual trade location. Okay, they're going to try and hold that probably the first time in. Okay, so remember, got it. Okay, thank you, Peter. So the key there and I know what Brian's going to say here in a second, is that you're not being to the point, Simon. So I'm going to get to the point. Okay. This is a visual reference point. Day traders will use that visual reference point. Institutional traders do not care about this location. Okay? What you need to absorb institutional sellers, if they develop, is that TPO point of control. So understand, traders are going to try to hold this 1615 first time in. If they open drive lower, there's nothing between here and here to hold up. There's two visual points, 2410 to 2412, right? I marked that down on the chart. And then 2403 to 24.25. Those both contain, right, stretches down of 10 points from the prior day's close, and then intraday 10-point stretches, which means this 2410 is likely to generate an attempted counter response. The problem with that is if you get caught in that in an open drive lower, because it's a weak visual point, right, it's likely just to get run over in the process, right? And you don't want to get run over in that process. So I would say if this hits after the first hour, it has better odds of holding, right? If you do take this 2410, 2412, it's got to work fast, and you've got to be prepared for a potential sweep of that location, right? That's the only way I have of accurately describing that, is you have to be prepared for a potential sweep of that location. Okay, so those areas. Your key area, right, where I want to take a stand, here, 97, 95, okay? There's still support back to 93, so you should write that in, even though we tested most of it, right? Really, if it doesn't hold 97, 95, I'd get concerned. And then this area right here, 90, 88, and then this becomes a huge stretch, 79 to 76, okay? And that should, in quotations, that should hold, okay? But we're going to be really stretched, and realize the further we get, the more panicky we're going to be. Hold on a second here. Okay, hold on one second here. Okay, so that gives us a lay of the land. How does that translate into the chart specifically? Okay, so onto the chart, the way that translates. Okay, below 15, 18. I'm very concerned about this area. That's why there's not a chart here. If you want to note, 2410, 2412 will be a visual location. Traders will attempt to trade out of there. I didn't put the zone there because I don't want to trade there. I'd rather miss it than get swept early in the morning. If it holds or you get tick divergence or some kind of help into this area, be my guest, right? So the next area, 2404 to 2402. Again, a visual area. There's no volume or time build in this location, but it will be a stretch, okay? Tick divergence or first touch in should generate a 2-point counter rotation and possibly a retest of the low and a hold, okay? Again, NQ's opening very, very weak out of the gate, right? So that's going to be something that we have to consider right off the bat, right? Next, this 97, 95, this is the first area, okay? I'm going to change this to a white area. I expect this to get a responsive buy first time in. The white areas are just going to start to denote key areas. This is a minor HVN, okay? This is a 24-hour TPO. This area through here, there's an open gap, 82 down to 76. I would just put in your notes, I am looking for divergence and a big push into this area to help me grab a trade in this location. That's the only way I have to accurately describe this area. This is a stretch down now from prior day's close. We're currently trading 20s down 7. If we get into this 80, this is going to put us down in that 30 to 35. It's really hard for the market to push more than 35 points. It's not that it can't. It's just very, very difficult for the market to maintain that push lower. Okay, so let's summarize and get back to the plan, right? We're obviously having a gap down. The first questions are on the checklist. The range is expanded overnight, right? Number one. Number two, we're looking for potential open drive lower. Do we get half gap or gap fill on the upside, right? Remember, all this is checklist stuff, right? is NQ matching up with ES, or are they diverging? Are they even if they're one's opening significantly lower than the other, are they just simply trading differently than? Well, 1 second here. Are they simply trading differently than each other? Meaning NQ is going down, ES is going straight up, etc., etc. Right? The what is the next question the next thought process that I would have? Oh, gap downs. First 5-minute bar is negative, or first 5-minute bar is green, right? If we trade above it or below it, as long as that first 5-minute high or low holds and it doesn't get violated, potential trend day in that direction, right? And then the last piece is 3 red bars in a row, 3 green bars in a row, and where does the tick open? Inevitably, we would expect the tick with a gap down like this to be negative 700 or greater, right? So if it opens negative 100, right, kind of pause and let the market open up and develop for itself. The easiest way to avoid getting run over in the first hour is where the zones are most likely to run over. If we do have open drive lower, the market becomes much more tradable after the first hour as opposed to before the first hour, right? So judge your aggressiveness of where you want to be. Remember, the zones usually work, period, but what my experience is when coaching people is if you get run over in that first trade, you tend not to trade the rest of the day, right? If that's you, if you tend not to trade, if you get run over on your first trade, right, don't trade the first hour, because your odds of that trade working better after the first hour improves significantly, right? Lastly, we're looking for the size of the bars in the first 5-minute bars, right? Yesterday, yesterday in this open drive lower, this one bar is 28 to 25, roughly, 3 points, right? So if we're getting 5-minute bars that are 10 points wide, you know immediately, hey, gears have shifted, right? I'm in danger of getting run over at this juncture, right? Let me back off, right? Let me back off from going too quickly into this trade, and instead, hold on 1 second here, and instead switch gears, right? And go, okay, I'm in danger of getting run over because the size of the rotation is increased, right? What I want to see is I get to the low. See when we get to the low here, how the bars all of a sudden got smaller, really big bar, then smaller bar, consolidation at the low, right? We're familiar with this from a couple of months ago, right? This is what we're looking for, right? Instead of trying to catch these big bars, this is how you avoid getting run over, right? And see how the low holds perfectly? That's what we're generally looking for. Remember, we were just a few clicks away from actually getting into the white zone and having a pretty awesome upside day. Remember through here, if the 50-60 lands back in this area, right? This is a weak area, and you just simply have to be willing to accept that you might get swept, right? You might get swept through this area if you choose to take it here, right? So if you had taken the 50-60 yesterday, you would have gotten run over. And then lastly, we're just looking for the 5-minute tick divergence to set up, right? If you wait patiently, the market will come to us. There's not a rush. We know what we're doing, right? It's not like it's a giant mystery and we're trying to figure out, well, how are they going to make this, how are they going to make this work? And is it going to push lower or is it going to push higher? Almost every time, without exception, if we sit calmly and we don't have to be overly aggressive off the open, the market will generally come to us, okay? So one last piece. Please have your process in front of you so that if things start going south on you, okay, you don't overtrade. I see that in markets like this a lot. What happens is people get shocked at the speed at which they get stopped out, right? And then they take one trade after another trade after another trade. So have a short trick list, right? Here, we can just make it out right now all together to keep us safe, right? Checklist, and this is the checklist for entry after stop. 1, is this entry a valid trade? 2, check your feelings. Are you upset? Don't trade. 3. Is there a proper rotation? 4. Is the range too big for me to manage the trade? Lastly, a reminder. Markets expand and contract wait till the market fits your trade plan. Never-ending stream of trades. Okay? 5 little points, right? That should help get you back to a rooted, grounded point. Is this a valid trade? Check your feelings. Am I angry? Not a great way to trade, right? Is this a proper rotation that I'm taking the trade on, right? Is the range too large for me to manage properly? Is an important question, right? And then finally, a reminder, never-ending trade setups. They come again and again and again, right? Get back on course. On NQ, I only have 2 key locations on NQ. I'm going to cover that really quick, okay? The white zone down here at 73 to 51. This is an area I expect visually the 5600 and the 580. Notice I'm not even going to bother with Globex high and low because it doesn't matter on NQ, okay? This is the area I'm interested in for an attempted responsive buy. This 55.64.50 is the area I'm interested in for a responsive sell, right? Then above 57.86, nice and spread out. Remember, this thing can go 100 and it can go 200 points up and down. I want to show you overnight on the last 2, I posted up the bond and the oil levels. This is oil overnight, tested down into the white zone. Rotation from entry, this is late Asia, from 45.17, right? All the way up to 45.96. It's a great trade. Not saying that it was easy or doable. There was even a backside test almost to the top of the zone right here at London Open, right? On the bonds, right? Again, I noted this as a weak zone. We came in, we pushed in, backside tested, held. Now, notice, even though this zone busted, right? See how the first push in gave our counter rotation back up, and now look, we've come right down to the next key location here at 5:30 seconds and rotated all the way back up. These are good trades, right? Oil inventory day today. Okay, keep that in mind if you're trading oil. May God be with you, and that's a tough trade. I don't know what else to say about that. Let the market open. Look for the opening prints. I don't know what time oil inventories are today. Hold on one second here. Let me do one more thing. What was my last piece here? I had a thought process. Mirror image moves. Do not get bearish down 30 points. We've had them repeatedly. You get bearish. It looks like it's going to 0. Okay, even if you can't manage the long, don't insist that it's going to close on the low of the day. The odds that it does are pitifully low. Okay, it does on occasion. The key here is to remain balanced, checklist-oriented, process-oriented. Know the market will come to us. People are smoked from overnight. Know that there's people who trade the overnights after trend day, expecting us to open near the highs, and those guys are being caught out. Okay. Additionally, ES is finally breaking towards the bottom end of that range. If it breaks, right, that's what's been buoying the market is the banking index, right? So let me copy that chart so we can look at it again for this morning, because that's been, from what I can tell, the only thing that's been holding up the market. I want to see, remember, below yesterday's low, and that starts to get interesting, right? So we'll just keep an eye on that. We'll move this, add another marker there. Again, I'm not trading the banking index. I'm just keeping an eye on it. But that's the sign that first thing that has to happen for that banking index to break down. Okay, let me see, insert, symbol, NYSE tick, plot. Remember, I can't stress enough, don't let your P&L get out of control on a day like today. I'd give the first hour, you know people are already disrupted, right? Know where you are on the aggression scale and know where you are on your sizing scale and what you can and cannot live with, okay? That's my suggestion from the bottom of my heart. I think you can skip the first hour. So I think you can skip the first hour, and again, I'm looking for open drive lower or open drive higher on one of the two markets. Remember that they're going to have a backside test of this 5600 right away. This was held yesterday on NQ. That's really going to be a very interesting location both for pushes down. Okay, if we get pushed into this area, it's going to be key that we get back above 5600. Otherwise, that becomes resistance for test down to 5313 to 5505. Okay, and again, I would be surprised that people don't try to step in and save ES right out of the gate. The question is the half gap and the gap fill, and how aggressive you want to be here at 18 is up to you. I know I'm skipping the first half hour. Econ wise, by the way, we have final services PMI at 8:45, ISM non-manufacturing at 9 a.m. That could cause short squeezes into it. Crude oil inventories at 10 a.m., not 9:30, 10 a.m. Okay, so going to be an interesting first couple of minutes. I would not be in a rush to do much of anything. Let it open it and let them bring the pain to whoever's going to get the pain. Let me see, I have one more thing that I'm missing here. There's the open. So that was a backside test of last week's low. We know we expected them to push back up on that. The question is, can it break the first 5-minute high is really what the question is on this, or do we end up with open drive lower? It'll be very interesting to see. Obviously, you see they responded right off of that, right? Which makes sense. New high on NQ. And that's a visual trading location. Keep that in mind. And then tick is negative 1,000 out of the gate, so it wouldn't be surprised to see them try to lift that, right? Keep that in mind. NQ is down 38 points, so we'll see if they try to push it up or what they try to do with it. So 10 down to 14 right out of the gate, right? But again, this is a visual marker. Remember, these are all day traders coming in, is all this is. Okay? I'll be surprised if they give it to them that easy, as that's the low and they push it, but hey, anything can go, I suppose. We have not tested into Globex low yet. Here's the opening print on NQ. We just backside tested it. Again, we have to get above that and close above to make that push higher. Here's the opening print on ES. Fix that in a second. Ticks coming up. NQ pushing new highs. ES pushing new highs. Nice 20-point pop off that low. If we close underneath that 56.15.75 again, I will attempt an NQ short. If we close underneath on a 5-minute bar on a backside test of that area with a stop at the high, it's got to close underneath first. And it's got to give me a shot at that area. So I'm limit 1475. I'm stop at the high of the day. I don't know if I'll get it. And that answers that question. Screw. That sucks. Right back to the lows on ES. Again, the white zone's the key location. And I would give it back towards Globex low if it were me. Again, it could be a blender into the econ in 7 minutes, right? Well, that was a good plan. Didn't work out. Pulling my order, obviously. Damn. All I wanted was a quick backside tap of that 16-15 area. And down she rolls. Timber below, open drive lower, potential. Guys, this white zone is dangerous now. You just got to be willing to accept the stop. I'm not. Okay, so I wanted short on NQ. And I'm waiting. Okay, so I hope that helps. I'm sorry. I know if it works, everyone's going to be like, why don't you take your own zone? But we're right at Globex low. If you are uber aggressive, it's still 5 minutes in front of econ. And this has the potential to be an ugly open drive lower. So I'm on hold. Wow. And now I'm going to regret not taking that, but that's all right. I don't want to get swept. I've been swept too many times in the first hour in these conditions. I'll just wait. Did anyone take it? Hey guys, quick vote. I'm going to do this over Twitter. See if I can compose this so that it can be done anonymously. I don't know if this will work yet, but we will. Of course, it worked beautifully there. I posted a poll on the private Twitter stream. Everyone can answer anonymously. Okay, so into econ, if I can get them to test back up into this 14 area, I'm probably taking it with a 10-point stop, just so you know. That's my risk in that area if I can get them back up into that location. And I will note that we came out of the white zone for 2 points, right? So, and by the way, note that the white zone was very wide, right? 1850 to 1550, which is why I suggested pushing to the back. So from the top, right, still the conservative move was okay. The whole area is support, right? But it's looking a little shaky, I'd say. So they're trying to trap back above last week's low again. We'll see if they have any success. And really, we have econ in 1 minute. We'll see where we stand at 9 a.m. for setups. But I have a feeling we're going to get to test that 10-12. And then that 03-05 is really what my gut tells me. Look at the pressure, like barely a counter rotation out of that area. So realize this was a pretty good trade, right? Had I been able to tag back up to 1475, right? That was $400 a contract in potential profit, right? That's a lot of money on that sweep. Okay, so just be aware of that. Econ's out. Again, this is, in my opinion, open drive lower, no half gap, no gap attempt. Sellers are in overall control. Okay, we're going to have to see where they go with it. And importantly, and I'm trying to keep my pace slow, right? Remember, we will get setups through the course of the day, and probably very good setups after the first hour in this kind of environment. They're pounding on the back of that white zone. And it's really hard to break it. That's still a key location, right? So it wouldn't be surprised if that low can hold, right? That low can hold within 2 points of the backside of that low. It wouldn't be surprising to see a squeeze up into the econ, right? Again, I'm following my trade plan. I'm waiting the first half hour out. Except for this. I've got a scalp waiting for me right there. Okay, so what that means is if you want to take the risk with, say, a 2-point stop behind here, right, you've got a pretty easy low-risk trade through here. I'm not taking it. But that doesn't mean that it's not a valid trade as it gets blown up. Doesn't mean it's not a valid trade, right? So I will now start marking on the zones, all key zones, meaning zones that I'm probably likely to take outside of the first half hour with no question as white. Okay, so there'll be multiple white zones now. That will distinguish just any zone from a white zone. Okay, and the white zone means just what it means. I'm willing to take a trade in that location. Again, if I had taken the top of the white zone, we're in for 5, 10, 15 minutes, right? So you'll see how hard it is to break the back of that white zone. I've just trend day down from overnight, tick pushing up, price pushing down. Okay, so what this means is broader markets being bought and S&P is being sold, right? And we're breaking below the balance that's held for 3 days. Remember that all the way through with all that pressure on NQ. Okay, so let me explain the reason for my caution. I didn't do that. All that balance that was being held for 3 days while NQ was getting annihilated is gone poof, right? We couldn't get below 26 that whole time. 25, they pushed in, but that held like a rock, right? So think about that. Think about the players at that point. People have been accumulating that 25, 26. What were they expecting? A push back to the highs, right? They're like, look, NQ's falling apart. ES is holding like a rock star. I'm going to be a bajillionaire because it's going to 24.50, right? Well, all those guys are trapped now. What would you do if you were holding inventory from 25 right now, right? You're down 10. The weakest hands are dumping. The strongest hands are going to dump on that backside test of 25, right? They're going to go, thank you, Lord, for getting me back here and giving me a chance to get out of this trade, right? And I also want to remind everyone that on open drive lower days like this, right, these were days where we took 2 4-point stops back to back and we still made plenty of money. Missing these is no big deal. We've improved by actually avoiding getting run over in this area, okay? And again, I'm pretty cool with not getting run over, so. Well, Brian, if you were long from 25 and still holding, you were probably, A, you didn't sell yesterday, right? Which means you were probably looking for the high retest. And B, you're probably not a leveraged trader, right? It's probably closer to how you handle your options. Right? So what you're going to do is they're going to wait patiently. They're not so leveraged, right? They're probably 1% stops on their trades or 2% stops on their trades as hard stops, and other than that, they're going to let the market work over a couple of days. And if they do their 2%, they'll stop. Remember, if you use the 2% stop from your point of entry over the past 3 years, you probably have been stopped once or twice, right, before getting a chance to get a backside test. We just haven't had any big down moves, except occasionally, right? So if you chose a key area and you said I put a 1%, a 2% stop, and we just haven't had any 1% down days, barely, right? So remember, put your mind in the structure of your opponent, right? And that's why when OTF does get stopped out, it gets so brutal, right? Because those guys don't care anymore. They've hit their limit, and they're going to dump. That entire squeeze yesterday on NQ was manufactured. Unbelievable. Back to Wednesday's low. They're trying to hold it desperately. We're now behind the white zone, right? So again, impulse move down and a backside test sets that white zone up as a short location for me. Meaning 24.10.12 back to 24.15.18. That's what I'm looking for, right? And hopefully there's a 50-60 that lines up in there somewhere. Tick is still negative, has not managed to get back to 0 yet. Econ in 8 minutes. I'm going to take a quick break. I'll be back for the econ. He gone in 5, guys. So they finally held it. They tried to push a little bit behind. A 2-point stop kept you in the trade. You're still having a hard time from the top of the zone, but again, from the front of the zone, and even from the back of the zone, you're having a hard time squeezing out 2 points out of that so far. That econ better be a blockbuster. Again, they're trying to trap back on last week's low here on NQ. I can't believe I moved it. That's about right. Guys, if you're in the white zone, you just got to accept that stop at this point. It's been 5, 10, 15, 20, 25 minutes. The zone's done its job. I don't know that I would bail on it just from from right here, but I wouldn't stick a 5-point stop on it at this point. We've been unable to get back to a 0 tick on the broader market. Again, a bit of a blunder here on NQ. If you're trading it, just be aware. You know, people are trying to scalp through that. That's basically 10 up and down. That's $200 a contract in that little machete machine. Let's open this up a little bit. Let's reduce this a little bit. Let's stop this.